Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 5th of December, 2018, just after 3:05 p.m. Central Standard Time. Interesting day in that while we opened yesterday at 5 p.m. Central Standard Time in the stock indices, all trading ceased in them as futures markets at 8:30 a.m. Central Standard Time, and stock markets never opened. They never opened up the bonds or the notes. So as we're looking at these charts, it's important that you understand we're looking at something very abbreviated. I haven't heard if the exchange is going to include today's trade in the Thursday trade, or they're going to make the 5 o'clock time to 8:30 this morning stand alone as its own day. I would guess it stands alone as its own day, but we'll see if I'm right or wrong on that. That would be logical. As we look at a weekly area chart of closes, this does take in the trade through 8:30 this morning. We're still down 40 points. The market still has this pattern of lower highs, lower lows on a settlement basis. The gold line is where we closed on December 29th, and here's your bigger problem. What is China and the U.S.? What are they doing? Do we have a deal? Don't we have a deal? China has been unusually mum about what's there. We haven't heard President Xi say anything. We have heard the ministry with abbreviated messages. They're working towards a March 1st deal. What does that mean? Are they buying crude oil now? Are they buying soybeans now? We're all sort of lost. What about the car tariffs? Are they going to roll them back to 15% from 40%? Are they waiting for a deal? As usual, China takes it very slow. Our president thought that he had a deal, and the market doesn't know what we have. When we take a look, you can see that you had an inside trading day today, and yes, I'm going to consider this the day. The market did make its run up to the 62% number from the high to the low. That's called a Fibonacci, and it failed there. Now, getting through this number again would be bullish. Staying under that number keeps the bears very much alive. And in fact, if you take out 2696, you could end up with a pattern of lower highs, lower lows. In terms of the 18-day average, you're under it. That would put back into play the potential to get back to the lower Bollinger Band all the way down here. Interesting what's going on the chart. Resistance area, right where you're at, that 18-day average of closes. Momentum of the market, down. So I have a chart here where you closed at 27.18, which is over the 18-day average. The bias is up. The momentum is down, and do I have a trend? Here's this. You could say you're in an uptrend if this turns out to be a full day of trading. I would then have higher lows, higher highs, which even puts more importance then to the 2696. It would break that uptrend if it's taken out. I'm going to view 2696 as an important number. When I come to the NASDAQ, you can see the market on that whole rally pulled back from hitting the 200-day average in this gray number. Didn't quite make it to the upper Bollinger Band. Back to what I call a neutral point on a chart. I consider the red line, the 18-day average itself, is the most neutral part on a chart. When the market's under it, it often makes a run back to it and finds resistance. Over it, back down to it, looking for support, and from there it tries to figure out a trend. Momentum sort of flat right here. Hard market to figure out. Same thing in the Dow Industrials. Look where we finished today. Remember, we did open today in futures. It's right at the 218-day average of closes. I could argue higher lows, higher highs, but I'm not certain if today was considered a full trade day. I'll know that tomorrow, I guess, or tonight when at 5 o'clock, you'll probably know when they reopen the market, how they're handling it. This whole thing happened so fast that we're all trying to figure it out as chartists. In the Russell, you have a lower low, higher high. Not very bullish. Momentum pointing down. The VIX never opened today, so don't worry what it did. It's the same thing. It's still Tuesday up there. T-bonds never opened today. So the market's still over that upper Bollinger Band. You did the same in the 10-year notes, as you can see. I can go on and on. There's just no point in looking at some of these charts because they didn't trade. TLT never traded today. Stock indices, the stock market, talking cash parts, they weren't around. When we come over to the dollar index, we do have a pattern of lower highs, lower lows, but you are over the 18-day average, so that negates the swing line trend down unless you get back under the 18-day average, and momentum is useless. It's just drifting sideways. Momentum in the euro acts like it's drifting down a bit. The market fought today again at the 18-day average. If you get under 113.18, you could negate this by having a higher high and lower low pattern. It would not turn bearish, but it would knock me as a bull out of the market looking for reasons to be involved since we have the pattern of higher lows, higher highs. I admit that was neutralized by just staying under that number today. In the British pound, you have the embedded reading. If you lose that by the red line getting over 20, I look for the 18-day average to be hit. We know that every single day in the British pound is like going through a major market event. December 11th, which is now 6 days away, is when the scheduled Parliament vote on Brexit takes place. Every day is different. Ministers resign. Different parties are going, no, we're not going to do this. We saw the European Union Judiciary Committee, or whatever they want to call it, judicial system, give the okay that if the government wants to back away from Brexit, legally they could. I mean, it's wild. But the trend is down at this point. In the end, you pulled back from this big rally that you had. Remember what I said, markets often pull back to that 18-day average, trying to figure out what to do. That's what you did today. You're still bullish. Higher lows, higher highs, but flat momentum. I think we'll find out a lot more tonight. Still very bearish on Bitcoin. Lower highs, lower lows. Actually, I should take this arrow, move it here, pointing down, and a fully embedded reading. If this market makes a run to the Bollinger Band, you're going to be under $3,000 an ounce. In crude oil, how do you play the OPEC deal? We've seen certain ministers come out today, I think it was Oman, and they were saying there is a deal. What's the deal? Then I heard that if Russia on Friday, and that's when OPEC's going to talk with Russia, doesn't go into the deal, there is no deal. I'll let you figure it out. I find these things too difficult to play, and OPEC has a very unique way of really not releasing an announcement after the fact. What they do is let all their ministers come out and leak things, and trying to trade that leak is very difficult. You have a pattern of a higher high, lower low in Brent. You lost the embedded reading, which often leads to price and the 18-day average coming together. You did that today. You got right to that 18-day average in WTI after losing the embedded reading, and the market ran into its brick wall. You made the same run in the rebob gasoline. Now, the market in natural gas has got a pattern of a higher high, lower low. I don't know what to do with that. So you put it all together, it's a confusing day, one that gets thrown off stream because it was a national day of mourning for President George H.W. Bush. I like to say H.W. because that was his name. Remember our Pivot Point 3-part series. And what it is a video that explains what this important tool for day trading or getting in on a position you might want does, how it works. Then how to plot it on your chart, how to set it up, and then 3, how to tie it together with momentum. It's a pretty interesting tool. To get it, and it's free, give us a call. Go to our website. You can sign up for the Pivot Point or click right here. No charge. Put it in your hands, and you'll be hearing about our rune indicator probably tomorrow or the day after. You have a good day. I'm Ira Epstein.